Mariner from Aliom Financial joining us from the Sydney CBD, and Carson Scott and myself in studio here at the Sky News Centre. And Simon from Aliom, if we're reflecting on earnings, let's talk about Procter & Gamble in the United States overnight, because they're going out there, they're spending more on their marketing to get their brand out there, they're launching new products, they're cutting prices, and yet they can't get sales up. Do you think that's something quite concerning about the US consumer?
Yeah, look, I think softer data and those earnings weighing quite heavily on the US market and the US consumer, overnight. The bears will be running around as proof of impending doom and disaster. But the reality is this: if we look at personal incomes and spending for last month, they were flat. Yes, you can't spend it if you don't earn it, and I think labour market woes, obviously still symptomatic and still weighing heavily on that economy. Just in a wider look, though, I think most of it's a little bit of noise at the moment. We've got our GDP estimates already for the US, and it's looking good. Consumer spending looks okay. Household incomes has been rising steadily for the months prior also. So potentially one flat month, I think could look a little bit meaningless.
Simon, when you say GDP estimates are looking good, how good do they look from where you sit?
Well, I think they're just estimates, but I think what we're seeing is that the economy's still recovering. It's still moving in the right direction, but investors are still cautious and they're still nervous. There's a lot of stimulus being taken away from this economy, and GDP estimates, earning reports, some of the data series that we saw last night, no, they're not as good as analyst forecasts and what we expect, but they're still moving in the right direction. It's still recovering. There's still momentum in that economy, but the momentum's slowing. We heard from Greenspan that feels like a quasi-recession. That's not helpful. What we're seeing is a little bit of losing of steam in the economy, and that's being manifested in other things like bond yields coming down and the dollar falling as well. So that losing of steam, potentially not recovering at the same pace. Again, is that an argument to start some of this quantitative easing and put the patient back on medication? I'm not so sure. The market's just come off a 10-week high, and it might just be an opportune moment for it to potentially pause for a little bit of breath.
What will make you so sure then, Simon? If second half growth comes in at 1.5%, will you then be so sure that we need QE2?
Yeah, look, I'm not sure what the absolute level is for QE. I'm not a big buyer of that, I've got to say, and I think some of the comments around QE, some of the comments from Greenspan, some of the comments we heard from Bernanke about the economy still having a long way to go and Americans grappling with this, that, and the other. They're not helpful. As I said, just because that outpatient is not recovering at the same pace that it was, is no reason to put them back on medication again. And I think you've ultimately got to fight your way through, if you like, to a better place. And if you sort of just keep going back to the QE and the stimulus, essentially you're just borrowing from the future and you're making it a harder road to recovery overall.